is Vishal Suman and I am the Head of Trading Education for Sherkhan Education. Today we are going to talk about Introduction to Candlestick Series. Have you ever opened a trading platform and been overwhelmed by the sheer detail and expansiveness of the charts? Well, you are probably not alone. But don't let that be a hindrance. Believe me, trading is no rocket science. And understanding the bare basics can help you get started. Now let's say you open a platform and come across a trading chart. What is it that you see? All these graphs? These are known as line charts. And while they are useful to track the rise and fall of stock prices, they are not holistic. Similar to these, we have bar charts. A bar chart can help you identify closing and opening prices of a stock. But that's not what most traders use. Most traders use candlestick charts. While candlesticks are similar to bar charts that function in a bar chart, they offer far more detail than a bar chart. Some tall while others short. Some green while others red. But what are they and how do they work? Japanese candlesticks have been around for over a century and they act as an excellent tool for price action analysis. A single candle can help you with 4 important data points: the opening price, the high of the period, the closing price and the low of the period. Speaking of periods, each candlestick can represent an hour, a day, a week, a month, and even more depending on the selected time frame. Intraday traders use shorter time frames where one candlestick can even represent 1 or 5 minutes. Now let's say we are looking at a candlestick where the candle represents 1 hour. In this case, the open price, the close price, high and low points will be limited to the 1 hour period. Candlesticks. Surely you would have noticed candlesticks can either be green or red. The green candle shows a period where the stock closed above its opening price. That indicates bulls were in control. The red candle shows a period where the stock closed below its opening price. This indicates bears were in control. Oh, in case you didn't know, a bullish market is one that is on the rise, whereas the bearish market is the one that is declining in value. Now let's talk about the anatomy of a candlestick. Do you see this part? We refer to this as a real body, which shows the emotions of the bulls and the bears. On the other hand, these thin lines that emerge from above and below the body are known as shadows or wicks. They represent the highest or lowest points touched in that period. Some may ask, what does the distance between the high and the low represent? The distance between the high and the low displays the volatility of the price during the time period. A wider range implies increased volatility, while a narrower range implies reduced volatility. So by now we know that a candlestick can help us with the opening and closing price and the high and the low touched in that period. What determines whether the candlestick will be green or red, and the anatomy of a candlestick. Now we will fuse all these aspects to show you how a candlestick is formed with the help of an example. Let's assume our time frame is 1 day. The opening price of a particular stock, let's say ECOP, is Rs 100. In an hour, we see it touch a high of Rs 120, but then during the course of the day, we see the value of the stock plummet to Rs 80, which is the lowest point of the day. But by the time of the day ends, the price increased to Rs 90. Now, just see how the same information can be rearranged with the help of a candlestick. In case you missed it, the candlestick is red because the closing price, that is 90, is lower than the opening price, which is 100. And since I'm feeling particularly generous today, here is another example. this time with a 10-minute time frame where each candlestick represents 10 minutes. Here we see the stock opens at Rs 50. 2 minutes in, we see it touch a high of Rs 54. But 7 minutes in, we see the price drop to Rs 46, which is the low of the period. And as the 10-minute time frame ends, we see the candle close at Rs 50, right where it started. And the result is this, a candlestick with practically no body and long wicks above and below the candle, representing the highs and the lows. And that, my friends, is how a candlestick is formed the way it is. Candlesticks are both functional and artistically beautiful. You can gather a lot of information with just a single look. The easy flow of buying and selling pressure becomes more visible and lively on a candlestick chart than a line or a bar chart. Using candlesticks, you can tell how strong a reaction was to a certain move, and you can also understand which competing force won the battle. In our upcoming series, we will discuss individual candlestick patterns and their significance in conjunction with the price action strategy of demand and supply. See you soon in our next series. Thank you.